Okay, so we just before the top of the hour, here comes all the 1 hour traders, people that, or probably even the 5 minute traders are coming in here. At the bottom of the hour, you see the signal here is to just keep buying as it drops. Sounds bad, right? But yeah, you're trying to build a position, then dump it. And these buy stops should really be taken away. I think they're a little bit too high. I got trapped on that. Okay, so we got 2 minutes left. Looking for a smash down possibly. So I'm just going to put super deep waters. I already got a big hand placed bank in there. If you come to this limit grid, try to get the... now if you want to trade real heavy, this is 20 pips stop to make 40. This is 20 to make 40. Right, $40. And yeah, you can just do the math. It's easy, but I wrote the math on these scripts just so I keep track. So I just think this is about all you need to trade here is the 5 minute chart. Right? If you're quick on the draw, now your chance to sell this on the 5 minute ATRs was kind of like this last one before it crushed down. So, but you're talking about 5 minute trading, you know, you got to get out. There's always somebody coming in on the other side. So the 1 hour, 30 minute, we could still crush down into here. So I would just put these on the wicks here. You could just put them right on the wick. That way you'll know that it makes sense to put it there. So the green, light green is my entry price, and the stops and take profits are in black. Okay, we got 1 minute. We can still get a crush down. Dollar CAD I'm buying on a crush down. Right here, I just put orders in. I really do think dollar CAD's baked. It's done. You know, if we start going through this, it's just a big hole. There's just a big hole to fill here. But I'm not going to sell here and put a stop 100 pips above me. You know, you have to get on something here like where you got to get on, right? 15 minutes clean down. The news out of Canada. So this is actually moving with the British pound in sync right now, believe it or not. I've seen these move together. I used to watch these two pairs forever, stare at the screen and go, "Oh, those guys are moving together. It's crazy." Go figure. So here, we were going to buy down in here at support. So just going to place all the orders down here, and then the fine-tuned small orders here, right up on the edge of that void. And if you look at the zoom out, and you can see there's plenty of liquidity down here. I just place them in. Set it and forget it. Nothing you do is going to change that idea of buying low, selling high. So it's hard to accept. It's hard to accept the fact that you don't know the exact pip it's going to turn around on. Otherwise, you just trade that price, right? So accepting the unknown, the uncertainty of trading. Here's the vacuum fill here. You would have got trapped if you let an ATR bot come in like this and bracket this bar. But see, if the ratios were expanded and you wrote enough scripts, right, enough, you got into a 10K here, it smashes down, you start cashing out. Everything's done in a stream. Everything's order flow. But it's not, it's your order flow. So it's in and out, buy, sell, go flat. Market crashes down 300 pips. You've planned for that situation. So you plan for all scenarios. Some outlandish things that may not happen, but look at this British pound down 350 pips. So, but in the meantime, it's swinging in 150 pips. Can you trade that? That's my question. Are you nimble enough to jump in and say, oh, you know what? We're swinging in 100 pip ranges every 15 minutes. So I have a trade plan for that. Pretty tough, right? If you're getting in on a low range breakout, if that's your entry, you'd be scared out of your mind to trade with limits and all that, because it's not a setup. So you're really just trading unfair prices. You're really trading insanity. Very flash, and it's a reversal. So it's trend then no trend. And not only is it no trend, it's a complete engulf of the previous thing, and it becomes this, it's very whipsaw, they call it, right? Because especially if you have a bias. Now you're really, you're on your head, you're standing on your head, now you're not, you're standing in your head, so it puts you standing on your head. So accepting the fact that what really rules the market is when it goes from loud to quiet, and that's all there really is. And the places that it runs to when it gets loud, when it's burst out of a congestion, because that's an aha moment where everybody just looks at themselves and says, "Oh, really?" And then it continues. So there's a lull, supposedly, in any crowd. There's a lull every so many minutes. So right there, it's like, oh. And not to mention, money management, people have trailing stops to protect the profits, and then they activate the crowd flow, But so you have your order flow in the crowd, in the auction. You bring your stuff to the auction. You got a bunch of things, You're going to buy some stuff, maybe mark it up later, sell it, So it's like that. I can't think of it as a turn on a dime at one price kind of thing. So I'm just waiting for the fills on this stuff. We're trying to get into about $1,000 of margin here. Try to make it to 20,000. So I had to buy the British pound last night. Made 3,000 on this dumb old British pound. Using about 20 standard lots. Probably the peak moment there. Big run up there, 4 hour. Huge retrace. Yes. So this big rally off the bottom here. If you bought down here, you're up 100 pips, easy. And really such a violent move that if you'd drawn a channel, they blew it out, right? If you were thinking in channel terms, if you gauged off of this, they blew that out. So it was just a matter of stepping in and buying up just a ton. Just buying so much beyond this price level. Right, anything beyond here. So we're starting to retrace now. I'm going to put buy stops in. I'm going to buy at the market. We're sitting right at the previous top bottom on the 4 hour chart. It's 9 o'clock. All right, go figure. So we're retesting the doji. Now we're just going to put buy stops in. Try to ride a rally. It's getting pretty vicious here. Look, it's still slammed down there. Look at that. So very fickle. 4 hour charts just updated. So we have 4 hours to see how big this candle's. Now you can wait till the end of 4 hours, and you could say, okay, well, I'm going to see, or you could buy right now because you have a doji. The last bar is dead in the water. The open to close is dead in the water, so there's there's some kind of angle inside that. So without question, you would put a breakout in here, buy stops, or you could buy at the market, which is kind of what I'm doing. So I just adjusted one key to go 70 pips in there because it's such a vicious market right now. So we're waiting for the retrace into the opening of the stock market. The dollar CAD's still tanking, and I'm just going to buy blindly down in there. Right support. All the way down. So look at this poor thing. It's trapped sideways. Range trader's dream, isn't it? Buy at these wicks on the daily, sell at these wicks. What is so hard about trading that you can't place an order up here? You know, I guess I'm just, the reason why I find the cliche stuff on the internet about trading is so funny because trading is so simple that, you know, if you have to do this consensus thing, have you ever heard this one? Well, you have this list of stuff and it's like a jury, and then, you know, it's a good, take the trade then. Okay. Right. We have a consensus. It's a good, no, why don't you just put the order up? Why would you just put an order up there? Put a bunch up there. People are lazy, man. Can you do it for me? Oh my God, I put orders up here. Oh, it's hurting my arm. Oh my God. Yeah, you better go to your, run to your, look at this, right at Doji, right at the fucking round number. You can get the round numbers to be different colors, you know. Anybody that's really wants to get it like all blinged out, you can do the round numbers in a particular color in the code there. Here's an idea. You can blend the other indicator, the cloud trading. You can take your 100 pip thing and make it 24 pips, 24 pixels, and make it a powder blue. And you'd be a cloud trader. If you make those big enough, you might cover like, depending how you scroll the scale, you'd see a great little cloud to place all the orders. I mean, cloud trading would be great if people placed orders in the clouds, but they don't. They have this, well, I'm waiting for the Takanashi to cross the Wakanashis. I'm like, God, can I get a side of wasabi with that? Like, what the fuck is going on here? Yeah, some Zen. How about just like throw dartboards? Remember the old dartboard trading? When in a bull market, you could just throw darts. Hey, look at, yeah. Euro dollar, right? The euro dollar is getting crushed across the board. You find the one that's about to get crushed. You run. You want to really trade the euro. Yeah, euro against 6 pairs. Put on your screen. Pull the trigger. But nobody's going to do that because they don't have a execution system. So I got my my buddy here, and this guy is just tells it like it is. I can't, you can't really add to it. It's really, so when I took this this trading psychologist, and he's going to describe the how to make money trading, and it's just my favorite. It's part 1, and this is why I'm writing scripts and running scripts, is so I can be consistently losing. I want to be consistently losing. Okay. Morning. I'm still having coffee, waiting for the Dow to open here. I'll listen to my favorite preacher. And thank you, Jesus.
I've been a trading coach since 1982. And over the years, I've worked with some of the industry's biggest hedge fund and money managers, as well as some of the exchange's largest floor traders. I know that all of you want to experience consistent results from your trading. In other words, you want to be able to generate an income you can rely on. However, one of the major obstacles in trying to accomplish this objective is in the area of trade execution. To produce a...
See, now this is where the scripts come in. You get this execution down, you know exactly the trade plan, you've got all these little, like if you're doing a painting, right, you got to come back with a broad brush, come back with a, you got to keep switching out. You're not just going to hit it with one. So execution, gosh. So I guess when I test the system, I guess I take it over the edge and over execute. You could over execute, I suppose, over trader, right?
Consistent income, a trader has to be able to execute their trades without making any errors or mistakes.
So the errors and mistakes, you could accidentally hit one of these take off profits when you didn't want to get out. There's a lot of stuff that could go terribly wrong if you're in a really, say you got no swing trade, right, and you're scalping and you're like, oh, just close everything. I had to make sure my audio's okay because, I had corrupt audio on that other thing. Sorry, it's like, I don't know how to, if I had a tape here, I'd take a razor blade out and I'd splice it, but I don't know how to get rid of the I guess I should put a warning on there, like an audio warning, like a yellow triangle with ears on it. But yes, I really, when I came across the scripts, I said, "Wow, this is going to be crazy because I'm going to be able to finally have a consistent way to lose money." But you could, if you could make a mistake here and get out of a bunch of winning trades. If you hit close, take all profits here. So I try to make it a little bit harder to get to close all. Make it hard to get into certain things on the platform. So it's like you sure want to do that. And I can also take this down to just hotkey setting, right? So I can just see, I put this on a tab, just double click this stuff. So if I wanted to buy on a stop right now, swing trade, it's going to look like that. So 70 pips, this is going to make. So it's about having organization and just saying, well, I'm going to buy. If I'm going to buy? Do I buy now a little bit and buy some deeper, or do I see that the volatility is so off the fucking rails? I got to put orders in like 50 pips deep. Do I have a button to press for that? Because if you have a button to press for that, instead of, I'm going to put it on a Fibonacci thing, or even I'm going to put it at the wick's end here. Now, here at the wick's end, you would have not got filled here on buying limits. See? So you don't know. So if you're trying to buy that, you had to buy this whole plunge here on the euro dollar. Right? You had to buy this whole vault this morning as the market comes in. So to capture that in a sizing way, that in the end the size makes sense. So I can see why people are having a problem with this kind of trading, because they're thinking, well, each ticket here must be for a different reason. Like this is based on the Takanashi, this is based on the Renko Ashi, this entry is based on stochastic, this one's based on, somebody said, hey, this one I just felt like it was going to keep going up, and this one's based on my Fibonacci that I customized. And then these other ones, obviously these are the percent R's, just percent R, Williams percent R, and they never fill. But I knew that going in. So I can see the problem people are having with it. So where are you going to get out? Now, I could set the ratios really tight in here. Right now on the buy side, they actually are tight. So the funniest thing is I've doubled the account in 48 days, but guess what? 50% win rate. Uh-oh. Loser. Yeah, this guy that was telling me he's making 78%, I'm like, wow. Phew. Okay, well, he has to. I don't have to. I'm lazy. I don't want to live like that. Sitting there standing, having somebody with a chain around their neck standing over me. So waiting for the stocks to open. Yeah, let's just go. Let's not be primal, okay? So this looks like it could retrace. So does this. This is the half hour, 15-minute British pound. So here you can see this is C3 key I kept running last night. I don't know how good that did. I didn't really see which made more money, the buy stops. Now here's the buy stop. For the scalp, that's a 6K, and then here's the buy limits, which the market's calming down now, so I hit the C2 key here and I can get a decent entry.
In other words, trading without hesitation, reservation, or internal conflict.
See, you can take care of that in the script ahead of time. So I was with Mark Douglas, and he said, oh, here's an exercise. Go home and write yourself a check for $100, and you just write it out to your, in other words, just consider that money lost. And I thought, that works. It works because you've detached yourself from, you're like Buddha, right? See, some guy was talking about Zen. Yeah, you got to detach yourself from the money to make money. So it sounds kind of perverse, but detachment is the creed of the Buddhist. Right? They don't identify with their car and their belongings because they know that, well, they're a spiritual being. Not everybody thinks like that. If you're super logical, you may just think, oh, well, just, but who knows, right? But let's just assume for sanity's sake, a lot of people need to hold on to a philosophy, even if it's mystic, just because better they be in church than murdering my pet chinchilla. So it's definitely there for. It definitely works, right? I'd rather have some guy be a drunk than walk around on meth and doing high activity violence, doing high energy violence. So back to the preacher.
Basically, all of the errors we are susceptible to are a result of a lack of confidence, or more specifically, trading with fear. What most people don't realize is that trading without fear is actually a learned trading skill, a skill that has to be cultivated and is the primary difference that separates the professional from the typical trader. In this series of DVDs, I'm going to provide you with the kind of insight, understanding, and specific mental techniques you'll need to learn to trade without fear, so that, like the professional, you can move in and out of your trades with the kind of confidence and ease that will allow you to take full advantage of your wise trade or any other trading methodology.
So he was hired by Wise Trade to do that video. But yeah, going in and out of the market, definitely difficult to just not even think about it. It's brutal. Not easy, but there's something he says here that is the culmination. Let's see if I can find it here, where he gets into he finally makes a point.
Let's just go through and take a little bit of an attitude survey here, kind of get an idea where you're at. There are no right or wrong answers here. It's just a matter of what you believe about the nature of trading. So if we just kind of making money as a trader is primarily a function of analysis. Who would agree with that? Everyone, come raise your hands. It's all right. Raise your hands. So you're telling me that only a few people would agree? Part of it? Okay. Okay. I often find myself thinking there must be a way to trade without having to take a loss. Come on, be honest. Come on. No, yeah, you know, let's say I find myself thinking that there must be a way to trade without taking a loss, right? Okay. Okay. By the way, the first one of the things, this is a primary. One of the things we're going to talk about a lot of making money as a trader is primarily a function of analysis. That really isn't the case at all. What you're going to learn, in other words, trading is execution. Trading is execution. What you decide to do, of course, is analysis. And the problem is that it depends on what you're using your analysis for. If you're using your analysis to avoid the risk, then certainly making money is not a function of that, because you will virtually consistently lose. But
isn't that great? You consistently lose. If you're using analysis to reduce not lose, to reduce your risk. See, the only thing that reduces your risk is a tighter stop, right?
We're going to talk about that more in a little bit, okay? Okay. I have trouble getting out of a losing trade. Anybody here still have trouble getting out of a losing trade?
No, just blow up the account.
Trade? Okay, that's fine. You won't have that trouble after today. I'm really, my goal is that when you walk out of here, you will understand in no uncertain terms that there was absolutely no reason to hang on to what you will define in advance as a losing trade. Do you find yourself planning trades you never execute and executing trades you never planned? That's a pretty common thing that affects most traders. There's always a cost associated with finding out what the market may do next. It's good to think that. That means you're accepting the risk. That there's a certain amount of, cost meaning a certain amount of risk involved in finding out what the market may do next. If I were to thoroughly analyze my trading results, I would find that my average losing trade is much bigger than my average winning trade. Well, there's a few people in here that might still be falling in that category. It only takes one trader somewhere in the world to negate the positive outcome of any particular trade. Who agrees with that? Anybody? Raise your hand if you agree with that, please. Nobody raises their hand. Oh, this is big. I love it. Thank you very much. Thank you very much for not agreeing with that, because you couldn't be further from the truth. You couldn't be more wrong. This is one of the things you're going to learn. It only takes one trader somewhere in the world to negate the positive outcome of your trade or your edge. That's all, just one. You're going to learn that today. I wouldn't put on a trade if I wasn't sure it was going to be a winner. Who agrees with that statement? Please raise your hand, please. Who agrees with that statement? Good, good, good. I'm saying good because Because what I'm saying is that, yes, there is a gap here that we're going to have to fill between your particular attitudes about trading now and where you're going to end up with, hopefully, by the end of the day. I would answer this question, absolutely not. I wouldn't put on this trade if I wasn't sure it was going to be a winner. I trade from the perspective of I don't know if any trade is going to be a winner. And I don't have to know. As a matter of fact, that is one of the principal, let's say, principal concepts that you will have to adapt to become a consistently successful trader. And what the pros have adapted, and the reason why they can do what they do, is because they have learned, not just learned, but they believe, without a shred of doubt, that they do not have to know what's going to happen next to make money. And don't even think about it in those terms. They don't even think about it in those terms. It's not a matter of what's going to happen next. When you understand the nature of how technical analysis, how your technical formulas and your mathematical formulas interact with market behavior and what they can and can't do and what their inherent limitations are, you will also understand that I wouldn't put on a trade if I wasn't sure it was going to be a winner is absolutely one of the worst mistakes you can make to be a consistently successful trader. It is. In fact, it's probably the number one. Kind of perplexing at this moment? Yes? Good. Okay, I always define my risk before I enter a trade. Is everybody here in this room at the point where they always predefine their risk? Who doesn't? Raise your hand. Please raise your hand. I want to know where everyone's at. Come on. It's all right. Okay. Sometimes I find myself blaming the market for what went wrong. Well, let me ask you this. Does anybody feel betrayed by the market ever? Anybody ever feel betrayed by their signal, their technical signal, or whatever methodology that they use? We're going to talk about that in detail too. The more a trader learns about the nature of the markets, the easier it will be for him to execute his trades. Who thinks there's a correlation there, that the more I learn about the nature of markets and price movement, the easier it will be to execute your trades? Who thinks there's a positive correlation there? Okay, again, couldn't be further from the truth. There's a negative correlation there. The more you learn, the harder it's going to be to execute your trades. It depends on why you're learning it, of course, but we'll get into that. To be a successful technical trader, you have to determine what the market is going to do next. I already said that's not the case, so you'll know how to answer that one. But if I hadn't said it, how would you have answered it? Who would have said yes if I hadn't have already told you guys? A couple people? And you came to Houston? Oh, come on. Oh, come on. Okay, trading skills. Who are the professionals? We already talked about that. And why would it be beneficial to think like a professional trader? We already talked about that. What's the answer? Anybody can make money, okay? We kind of already established the fact that anybody can make money as a trader. Consistent. Yeah, we're talking about consistency. What we want to do is we want to close that profit gap. We want to make sure that our bottom line results reflect the potential of our methodologies. Okay? And that's what the professional has learned how to do. The professional has learned how to close that profit gap. They have learned the appropriate skills to do that. They're people just like you and me, okay? They're no different. They really aren't. They've evolved into a different way of thinking about trading. That's the reason why they can do it. And you can do it too, with understanding and awareness. That is really primarily what this workshop is about anyway. Because when you think about it, if you've read stories of people who have aspired to greatness as a trader, you'll always find, with almost all of them, that there's this underlying thread, this underlying theme that virtually all of them have lost one or more of what they considered a fortune before they started becoming consistently successful. Why do you think that underlying thread or theme exists in their lives? What's that? Why do you think that commonality exists? Because at some point they lose so often and then come back from losing that, one, they gain the confidence that they can do it, and as a result the fear dissipates, and as soon as the fear is gone, they're trading from a carefree state of mind, and when you trade from that carefree state of mind, everything about your trading changes. Remember that the primary skill that we're talking about here is simply trading without fear. This is a trading skill. It is the primary skill that you will have to acquire to create consistency, to trade without fear. What does consistency look like? I've already went through on the grease board here and showed you a consistently rising equity curve with the drawdowns, the normal drawdowns being a reflection of what? Can anybody remember what I said about that? What was that? Normal losses that reflect any trading methodology, right? Okay, what skills are necessary to experience a winning trade? Now, think about it. Now, I'm going to contrast, okay? I'm going to do a little bit of contrasting here. Just to show you one of the reasons why it can be so difficult to get even into a frame of mind where we start asking the appropriate questions about what do I need to really be consistently successful? Because what does it really take to experience a winning trade? What skills do you need? Anybody got any idea? What skills do you need to experience a winning trade? What? What's your name, sir? Maurice says a click of the mouse. Who's with Maurice on that? Come on, who's with Maurice on a click of the mouse? Got 1, 2, anybody else? 3, 4. He's absolutely right. That's all it takes. There are no other skills needed. No other skills needed other than the actual physical ability to put your finger on the mouse button and click in the buy or the sell, and you can find yourself in a winning trade. You can find yourself in a spectacularly winning trade, far beyond what you could have ever imagined. And what skill did it take? What did it take? Just doing it. That's all. Just doing it at that moment. Do you need an edge? Do you even have to know what an edge is? Is it possible to just to walk up to your computer and the arrow happened to be on the buy button, you click and then find yourself in a winning trade? You didn't have an edge, did you? You just clicked it. What did it take? It took nothing. Do you need a plan? Need no plan. Do you need the discipline to execute the plan? No, you don't need that either, do you? Now, see, the opposite of all this, of course, is what we're going to be talking about in terms of creating consistency. But go ahead.
What you're saying is a blind squirrel will eventually find a nut. Sorry. What you're saying is a blind squirrel will eventually find.
Did you say a squirrel? I'm sorry, yeah. Squirrel.
Squirrel.
Okay, squirrel. Okay, go ahead.
Yeah, I can click a mouse. You know, the arrow hits the buy. I click. I get a great trade. That's good. It's all the things that lead up to me. That's the implementation. But what about all the things that lead up to that implementation?
Oh, I understand. I'm not negating that at all. I'm just saying that the reality is you don't need anything. That's all I'm saying, because I'm contrasting here. I'm just making a contrast between what you need to be consistent and what you need to win.
Oh, okay.
That's all I'm doing, okay?
You just summed that up with what I was about to say. There's all the difference in the world between having the skills necessary to experience a winning trade as compared to having the skills necessary to consistently experience a winning trade.
Absolutely. That's all I'm talking about here. Because see, because what this does is the non-understanding this contrast creates what I call like a huge psychological gap. Because because it's very easy for us to think that trading is easy. And if you believe that trading is easy, even if all your experience is starting to tell you that it's not, it doesn't mean that experience is dropping down to a level of realization where you change your behavior or change the way that you think about trading. If your first impression, if your first experience was that this couldn't be simpler. And then you spend, how many X number of years or half a lifetime finally coming to the realization that, you know what? Yeah, to win, like what do you need? Like I could be in a casino and plunk a $100 bill down at a blackjack table and end up with a blackjack. What did I need? Nothing. I just happened to win. Now, if I want to be a professional blackjack player and make a consistent income from playing blackjack, well, that's a whole nother matter, isn't it? And we're talking about the same things here with trading. there'd be a number of skills that I'd have to acquire to be able to make a consistent, reliable income as a blackjack player. And there are people who do it. Do you need a good reason to put the trade on to win? Do you need a good reason? No, not at all. What characteristics distinguish the pro from the typical trader? Well, they plan their trades. No. They execute their plan without error. We'll talk about trading errors in a minute. Big difference. Okay, they can move in and out of their trades with an ease and effortlessness that would boggle the mind of the typical trader. Okay, what do you need to achieve consistent results? Well, you're gonna need an edge. You're going to be able to identify an edge. You're going to have a trading methodology, are you not? Right? Okay? And you have to have a plan on how to utilize that edge. In other words, you're going to have to determine risk parameters. How much does it cost me to find out if this particular edge that my methodology provides me, how much is it going to cost me to find out that this edge is working on this particular trade or not? That's your risk parameter. Are you guys with me on this? Okay? Money management parameters. In other words, how much in other words, contract size or number of shares that you trade. All this has to be taken into consideration. You could have a standard amount, or you could have an amount that fluctuates based on other criteria that you use, to determine, the level of trade that it is. Like it could be like a 5-star trade or a 1-star trade. With a 5-star trade, you go in with a maximum position. With a 1-star trade, you go in with a minimum position. And profit objectives. You have to be able to set profit objectives. See, just having a methodology to get you into a trade is not enough. You have to be able to determine what the risk is on a consistent basis. You have to know what your money management parameters are, and you have to be able to determine where to take profits. None of these are easy things to do, are they? Trade execution. The ability to execute trades flawlessly so you can utilize your trading plan to its maximum potential. This is the big one right here. This is the area, because when you get right down to it, trading is execution. The act of trading is executing trades. And if you're going to execute trades, you're going to have to be able to do them without errors, because it doesn't make any sense to think that you will achieve a consistently rising equity curve if you're constantly making trading errors. Trading errors would be defined as mistakes. Mistakes that detract from your bottom line results. Now, the interesting thing about mistakes is that when you're trading from let's say the perspective of, it doesn't really take anything to win, then there really aren't any mistakes that you can make, because anything that you do could result in a winning trade for any reason. But when we're talking about making consistent money or an income that we can rely on, then everything changes about this. Everything changes. What I'm talking about here is I'm talking about these like 5 or 4 broad skill sets to be able to create consistent results, the kind of results that you can rely on as an income. You're going to have to learn an edge. You're going to have to acquire a trading methodology that gives you an edge. I'm defining an edge as that there's a higher probability of one thing happening over another. That's what an edge is. And we're going to learn the nature of probabilities here in a moment. You're going to have to have a plan on how you utilize that edge, meaning what the risk is, position size, and profit objectives. Then you're going to have to be able to execute. You're going to have to get to the point where you can execute that edge without making errors. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities. That's basically where we're going here. And I said this primary skill was learning how to trade without fear. Learning how to trade without fear is a function of learning how to think in probabilities. Meaning we're going to set aside or move from thinking in a trade-by-trade mentality, In other words, what this trade is going to do for me right now, am I right or wrong on this trade, and we're going to move to a series of trades perspective. Because that's what your methodology does anyway. Any trading methodology just gives you a win or loss ratio over a percentage of trades. In other words, if I take the same criteria that's in any kind of mathematical, any kind of technical formula that's mathematically based, or a technical price pattern that you would be able to see visually, what we're going to learn is that my edge, meaning a higher probability of one thing happening over another, is simply going to give me a higher win rate over a series of trades. Let's say the next 20 trades. 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. And that the actual, on a trade-by-trade basis, I don't know which one's going to win or which one's going to lose in advance. There is no way for me to find out. There's no way for me to determine that. That on a trade-by-trade basis, no matter what reason or rationale that you come up with, is that there's no way to assure yourself that it's going to be a winning trade. There's nothing that can tell you that. That trading methodologies give you a win percentage, let's say 70% of the next 20 trades are going to be winners. There's no way I'm going to know which of the 70, which 12 or 13 are going to be the winners, or which 6 or 7 are going to be the losers. What you're going to learn, and this is what traders, the professionals have learned, is that there's a random distribution between wins and losses over any given set of criteria that define your edge. There's a random distribution. I will get a higher percentage of wins to losses, but I just don't know which trades are going to be. It requires a complete shift in the way you think about trading. When you make this complete shift, everything about your trading will change. Now, I'm expecting you to make it now because we're still in the introduction. We won't really get into the meat of this until a little bit, but this is where we're going. Okay, that's all I want you to get. This is where we're going. You're going to genuinely learn how to think in probabilities, because when you have genuinely integrated these concepts into your mental system at a functional level, your fear will go away. You do not need to lose everything to get to the point where you can figure out that, well, I've got nothing to lose anymore, so I don't have anything to be afraid of. You don't have to do that, okay? You don't have to do that. All you have to do is commit yourself to learn how to think about trading in another way, and your fear will go away. Because what we're going to learn is the correlation between what we believe and what we feel. There's a direct correlation between if I'm going into a situation with a certain belief that, let's say, that my particular edge is going to tell me what's going to happen on this trade right here, I wouldn't even put this trade on unless I thought it was going to win. When you really understand the nature of price movement, which is what we're going to get into after we go through this section on skills, when you really understand that, you will never think that way again. When you really understand the nature of price movement, you won't think that way again. And that is one of the biggest problems that the typical trader has. Let's say the typical screen-based trader is that they really don't understand the nature of how prices move and the underlying dynamics, because you haven't had the exposure. You haven't had the exposure to the direct markets. Your only exposure has been those blips on the screen. And as a result, there's a real gap in understanding about what's really happening. When you understand what's behind those blips, what's behind those photons that show up on your screen, when you really understand that, you will think about trading in another way, in a completely different way. It won't even occur to you to do some of the things that you're doing now. Won't even occur to you. Okay, now, I've given you 3 so far. The next broad area that you're going to have to learn, it's like you can be an expert at defining an edge. You can even be able to execute your trades flawlessly, but run into the next challenge, and that's what I just call self-sabotaging beliefs. In other words, all of us have a sense of self-valuation. All of us have this sense that what we're worth as a person, you might say. And if you were to take like an old Ben Franklin accounting scale, okay, and this is positive and this is negative, meaning if you were to list every experience in your life, if you had, let's say, conscious access to every experience in your life that contributed to a positive sense of self-valuation, that yes, I am a worthy person, because what we're running into, I kind of got ahead of myself, what we're running into is this, is that when you learn how to define an edge and learn how to execute your trades flawlessly, what you're now exposed to is the possibilities for unlimited wealth. There's really nothing holding you back. Well, let's put it this way, there's nothing on the outside that's holding you back, but there might be something on the inside that's holding you back. Those things on the inside could be self-sabotaging beliefs. In the sense that if you listed all of the experiences that contributed to a positive sense of self-valuation and all experiences that contributed to a negative sense of self-valuation, that I'm not worthy as a person, I feel guilty about this, and this, that you could end up, you can go plus negative, or net positive or net negative. What could end up happening is that if you don't have the, let's say, the skills or the awareness to realize that as your equity curve, as you start making money, these internal forces, if you have net negative, these internal forces start building up to the point where they'll cause you to make unconscious trading errors, where you're not even really aware that you hit the sell button instead of the buy button. Those kinds of things. And you have to become aware of when these forces are starting to build up inside of you, and either compensate for it by not trading, to stop trading, or to find a way to neutralize them. And there are various techniques available. But all I'm saying is that these kinds of errors that are the result of self-sabotaging beliefs don't really have anything to do with your direct trading skills. In other words, your ability to identify an edge and your ability to execute your trade. But they can have an enormous impact on your equity curve.
I would assume that you would be monitoring your equity curve, and you would start seeing your curve go down in an abnormal way. And you would start looking for your whatever's happening to you. Let's say you're not feeling well, or whatever. Your wife just divorced you. Or maybe something.
Yeah, these are all good things, right?
Things
that you're bringing up. I mean, these are things that are all relevant.
What I'm saying is, though, you show two extremes, a normal drawdown and then the boom or bust drawdown. There must be some way to know, at least I'm looking for, to know when you start looking that you're self-sabotaging. That's my question.
Good question. As a matter of fact, there are software programs available now that will tell you that. There are software programs available that will tell you when, in other words, I'll give you an example. I'll give you an example. When I was working with traders, with especially like hedge funds managers and larger traders, there are people, first of all, there are people that their sole job was, if they were, let's say they were central, here, let me think about how important this is. They had, let's say they're in the middle, and they've got, let's say, 10 or 12 money managers. These are guys that all have, they're managing funds, okay? This guy's sole responsibility was to shift money from here to here to here to each manager based on chart patterns of their equity curves. In other words, they would chart the equity of these particular traders just like price patterns in the market to determine their potential for inordinately large drawdowns because of self-sabotaging beliefs. That's how sophisticated the market has become. That's how relevant these issues are. So that you can actually chart your equity, and then you start to go like this. Oh, well, and then do another one like that. Well, something's happening here, okay? I mean, it was really kind of amazing to me when I was working with floor traders especially. I mean, this one guy, this pops into my brain just as we were talking about this. I mean, you know, he came in for a consultation, and he had his worst day in his life ever. Worst trading day, lost more money than what he's ever lost in his life. And I said, well, you know, and you know, it's like normally, almost virtually, in every case, something catastrophic's happening in that person's life. But what's always amazing to me is how much of a disconnect that the person would have between the catastrophic event in their life and what they ended up doing as a trader in the market. And I said, well, you know, well, what's going on? And I just said, well, what's going on? And he's kind of, well, yeah, my wife and I had this really bad argument last night, and you know, when I left for the exchange this morning, you know, he slapped his kids around and he kicked his dog, and you know, it's like, and then he came in and had his worst day and didn't make the connection between what happened at home and what he did on the floor. I mean, he might have felt completely justified with the argument that he had with his wife in slapping his kid around and kicking the dog, but that's what's going on consciously. But let's say subconsciously, you know, everyone has, you know, let's say if a person's relatively normal, not a psychopath, you know, they've got some sense of fairness, and he feels guilty about what he did, and he took that guilt out in the way he traded that day. The market is not a good arena to be doing this, by the way. Okay, this is not a good area to be working these kind of emotional issues out. Go ahead. We need the microphone. You want me to put it right here, and I'll just hand it to him?
My next question would be the market also changes. The patterns or your edge may change in relation to the market. To distinguish between your own troubled state, let's say, and market behavior, I can see that maybe one of these fellows here in the pie there might be using a system that is not as valid as it used to be when the market changes. How would you know, if you were the guy in the center, whether he was just having a bad stay with whatever's going on in his personal life versus a change in his system in relation to the market?
Another good question. You wouldn't know immediately, but upon investigation you could find out. In other words, by just talking to the guy, or what you do is that see what you do is you trade in sample sizes too. In other words, when you have a particular methodology that has a defined criteria for when you get into a trade, what you do is you trade in a limited sample size, so that if you trade in 25 trade sample sizes, or like 20 or whatever, what you do is you analyze your results at the end of a sample size, and if your results are satisfying, then what you do is you take another sample size. If the results are not satisfying, then because you knew exactly what you did and under what circumstances you did it, you limited your variables. What you do is then you can go back and tweak your variables to see if you can improve your results. Because what's your name? Tom. Because what Tom was really bringing up is the fact that you're right, because we're taking a limited set of variables, a mathematical formula that's being applied to a dynamic event, and that dynamic event are traders who are acting on their own behalf, creating price movement, and they create patterns that were doing the same thing over and over again, but you've got new people coming in with new ideas and old people leaving, and as a result these patterns can change over time, diminishing the results of a particular edge. So what you want to do is you want to make sure that your sample size is large enough to adequately test that edge, but small enough so that if the edge is diminishing in its effectiveness, you're not losing an inordinate amount of money before you find that out. Does that answer your question? So that's how they find out. Okay. Besides that, there's software available that'll even tell you now. There's software available that'll track your edges, or to track your equity in a way that can indicate whether or not you're ready to take a hit. I don't know the name of it, but you know, because I just found out about it myself. So,
what are some other ways that you can address maybe a emotional problem you might be going through, or other things outside of the trading area besides stop trading?
Well, you say there are a number of techniques, a number of books available. There's counseling. You know, I mean, I'm going to make a recommendation of a particular book later on. You know, when we get into a little bit more detail. But you know, it depends on the effect that it has on your trading. I mean, you don't necessarily have to stop trading, but you have to make an objective assessment as to your state of mind. In other words, you know, you can actually say to yourself, am I in the best state of mind to be trading today? And, you know, and the kind of answer that you get back from yourself, you know, if it's relatively objective, it's like if you're really not in the best state of mind because of things that are going on in your life and some troubling aspects that you haven't reconciled, then, but you don't want to stop trading, well, at least you're aware of it. Another technique would be by keeping journals, because most really good traders keep pretty extensive journals about, you know, what they're doing and what they're thinking while they're doing it. And then you make this assessment so that at least if you don't want to stop trading, you still want to put whatever edges on you have for that day, you scale back. In other words, if your maximum position size is, let's say, 5,000 shares, you're not in the best state of mind, maybe you only want to trade 1,000. Maybe you only want to trade 500. In other words, to take these things into consideration. And you'd be surprised by just being aware of it and taking into consideration, a lot of times these things will reconcile themselves. Does that help you?
Yes, it does. Thanks.
Okay. Okay, and the last area of these broad skill sets that we're talking about is develop the ability to recognize if you've crossed the threshold from normal self-confidence into a state of euphoria. You guys are laughing. I finally got some giggles out of you guys here. What's so funny about this? Anybody want to share? What? What's that?
You don't want to be in a state of euphoria.
No, you're right. I mean, being in a state of euphoria, let's put it this way. The primary, let's say, the primary characteristic of the state of euphoria is that it's a state of mind of complete and absolute risklessness. Everybody get what I just said? You are in a state of risklessness. In other words, you have no ability whatsoever to perceive risk. So if, for an example, if this line right here, if below this line represents normal self-confidence, and above this line is euphoria, and this threshold's different for everybody, by the way. I mean, there are certain chemicals that scientists have found that, you know, that flood our mind and our body when we've crossed this threshold. I've worked with traders who will flip into a state of euphoria with one winning trade. Okay, usually for most people it takes more than one winning trade. But I have worked with people that they'll flip into a state of euphoria with one winning trade. Now the problem with this, and it's a great state of mind to be in. I mean, to be in in virtually a riskless state of mind. I mean, it's like, hey, you know, it's really a cool place to be. But the problem is that when we're in a state of euphoria as a trader, it's virtually guaranteed that we're going to make a trading error. And the kind of trading error that we'll make in a state of euphoria usually has to do with position size. So for an example, if you normally only trade 1,000 shares, in a state of euphoria, it's like, okay, let's mortgage the house. Okay? It's like, you know, let's go to 10,000, 20, 30, whatever. 1,000 shares. Because, you see, you absolutely know for a fact you wouldn't be putting this trade on if it wasn't going to work. See, you know for a fact. See, because you don't have any ability to perceive risk at all. Now the problem, even though it could even end up being a winning trade, it's not that the trade might not end up being a winner, but here's typically what's going to happen. If you're a normal 1,000 share trader and you go up to 10,000 shares, if when you put 1,000 shares on and the market went against you 5 cents a share, wouldn't be any big deal. You got 10,000 shares on when you absolutely knew for a fact that the trade was a winner, and it goes 5 or 10 cents against you. it has the potential to flip you into a state of pure, unadulterated terror. Instantaneously, you'll go from euphoria to a state of terror in one instant, because your expectations about what was going to happen were so resolute, it creates a psychological shock that puts you in a state of mind freeze. Mind freeze. Mind freeze is when you are conscious of what is happening, but find yourself totally immobilized to do anything about it. And so if the market happens to go 10 cents against you but keeps on going, okay, you just sit there and watch, completely immobilized, while the market takes your money away, until finally something flips you out of that, and you say, hey, you know, you just come back to your senses and you had enough and you get out of the trade. I know that's probably never happened to anybody in this group, but but I've worked with many people who it has happened with. So this is not something unfamiliar to anybody here?
The terror part,
It's like going literally from a state of mind, it's like literally going from heaven to hell instantaneously. And keep in mind the dynamics here. It was all based on your expectation. It's all based on your expectation.